Hey guys, welcome back to the channel. Today we are talking about how to invest your first $10,000 into the stock market. A very important topic for people who are just getting started in investing. My name is Rob and I have been traveling the world now for 8 years as an early retiree. Do want to mention that I am not a financial advisor, so please do your own research and make your own decisions. But this channel is focused on helping people to invest so they can enjoy their retirement life a little bit better than they would have had they not been investing. So today's a very important topic, how to invest your first $10,000. And we get asked this a lot by new people, so we're going to go over exactly what to do, what the strategy is, and give you exact ticker symbols that you should be considering for your investments, because this is something that you don't want to get wrong right up front. And I think the first thing I want to cover about this is that your first $10,000 is your starting point, and you need to realize how much you're going to be investing over time and kind of divide that out to determine what type of allocation your first $10,000 exactly is. Because when we talk about our overall investment portfolio that we're eventually going to get to, we want it broken down into several facets. The first one is going to be our core holdings. Those are the things that we hopefully will never sell, never need to sell, and that we're just going to hold for forever. And then we're going to have some narrower ETFs that we think do well. We're going to have some high upside plays, and we're also going to have some individual stocks in that portfolio. But for your first $10,000, you want to be focusing on that very first bucket. Think of these all like buckets where you're filling one bucket and then you're moving on to the next. So in other words, you don't want to move on to high upside plays until you've filled up your core holdings bucket, because the core holdings is what's going to form a foundation for your retirement, a foundation for your entire investment portfolio. So it's important to fill up that core holdings bucket before you move on to things that may provide more upside, but are going to come with quite a bit more risk as well. The other reason for that is if you are new to investing and you invest in something that's risky right up front and it goes bad, which risky investments by their very nature are risky, they have a higher chance of going bad, it's going to turn you off from investing for the rest of your life. And so you don't want to do that. You don't want to set yourself up for failure right at the beginning. You want to be investing in things that are going to be steady, that are going to grow with you over time, and that are going to give you confidence in your investing that you've been doing the right thing. So the way I like to think about this is each of these buckets, first one's going to be core holdings. Eventually, when we're all done with putting the money that we have in, this is going to be 60% of our portfolio. So 60% of everything, all our assets, and we do rebalance this from time to time so that this is 60%. Then ETFs outside of the core holdings are going to take up another 15%. And then we've got high upside plays. That's going to be another 15%. And then 10 stocks that we know and trust, that's going to be our final 10%. So 60% is what we're talking about today, core holdings. And really this comes down to just a few things that you want to put in there. First one is going to be the S&P 500 index fund, and that is going to be ticker symbol VOO. Now what this is it's kind of known as the benchmark for investing. When people say things like, oh, I beat the market, or oh, I'm not doing as well as the market is, or things like that, they're actually talking about this. They're talking about VOO, which is the S&P 500. That is the benchmark that everyone is trying to beat, and newsflash, most people can't beat it. Most people do a poor job of picking stocks, and they do not do as well as if they just put their money into VOO. So that's going to be the very first pillar of our core holdings. And when you buy that stock, that ETF, it's actually something that's going to help you rest easy, put your mind at ease that you've done the right thing, because you can really rarely go wrong just buying VOO. If you don't know what to do and you're ever at a point where you have money that you want to invest and you don't know what to do, if you just buy VOO, it'll be fine. Come back in 5 years, come back in 10 years, come back in 20 years, that investment will have done well. Historically, there's never been a long period of time where investing in VOO was a negative. Now, granted, for a week or a month or even a year, anything can go down, the market can go down, VOO can go down, but historically, this is one that will always come back if you give it enough time. So what exactly is VOO? It is a ETF that tracks the top 500 companies. And so you're thinking things like Apple, Nvidia, Google, things like that, all the way down the top 500 companies, but it's weighted by size of the company. So currently, right now, Nvidia is the largest company in the world. So when you buy VOO, you're getting a larger portion of Nvidia than, say, you are a company like McDonald's or Home Depot, which are going to make up a smaller portion of the index fund. And ETFs like this are great because you're buying one ticker symbol, VOO, and you're actually getting little bits of pieces of stock from 500 different companies, and that really spreads out your risk. It makes you very diversified, and it's just a great way for a beginner to invest because you really just can't go wrong with it. The second thing that's great about VOO is that it is a passive investment. In other words, you don't have to monitor it. It's going to change over time. Every 3 months, they rebalance this portfolio. So if a new company kind of comes up and makes itself bigger and another company falls by the wayside, think like Blockbuster Video back in the day. Something like that happens, that company will eventually fall out of the index and it will be replaced by a better company that is going to be a better investment. So you don't have to do a thing. That's all done automatically for you behind the scenes. So if you're a person that just wants to invest and not really monitor your investments, VOO is going to be great for that reason as well. And then, like I said before, it is weighted towards the best companies, which gives it a better chance at a great return. The top 10 companies in the ETF make up 38% of the holdings. The other 490 companies only make up 62%. So companies 490 through 500 are barely making a dent on this, but they are there for some diversification. So that's going to be one thing you can choose to put in your core holdings. And again, all $10,000, your first 10,000, even your first 20,000, if you have that, should be going into these core holdings. Second ticker symbol that we're going to pick for our core holdings is GLD, and that is gold. That is the same thing. It's an ETF that is buying gold, and basically it's pretty much the same thing as buying physical gold, except for they're buying the gold, storing it, and you don't have to take care of all that. So it makes it easier, especially if you're someone like me who is traveling around. I can't be hauling gold around with me. I don't want to have to rent something to store my gold in. So I just buy this ticker GLD. It buys gold and it tracks the price of gold. So gold is going to be one of our core holdings because it's very important. As someone who travels the world, we are very much at risk to currency moves. So the US dollar, if you just live in the US, you're not really concerned about the US dollar versus other currencies because you're always just paying in US dollars. But if you have your money in US dollars and you're living in Europe or living in Thailand or Vietnam, and those currencies are fluctuating every day. Some years you're getting a lot of value for your money. Some years you're not getting as much value for your money. And having this gold position really kind of gives you a hedge against your currency falling and basically all currencies going down, but also against the US dollar going down. Because if the US dollar goes down, usually gold does pretty well. So that's something that we like to have in our portfolio, GLD. And then the third part of this core holdings is going to be somewhat of a cash position, but it's not going to be just in cash. We're going to put it in ticker symbol SGOV, SGOV. And this is basically kind of simulates a cash position, but you're going to be earning 4% on this. And it's better than just having your money in cash. If you have your money just sitting in cash, it's going to devalue over time. This is making 4%, which is not a ton, but it is better than it going backwards. It is at least hopefully keeping up with and exceeding by a little bit inflation. And the reason that we put part of our money into SGOV is because this is our emergency fund. This is what we're going to fall back on if something unexpected happens, if we have a taxes we need to pay, or if we have an emergency that needs to be covered, something goes wrong. And for us, what we've done is we have put as much money into SGOV as we need to live for 1 year in the cheapest country that we're willing to live in. So that's a pretty good way to figure it out. Cheapest country that we want to live in is Vietnam. We can live pretty comfortably in Vietnam for $2,500 a month. That's $30,000. So we, in our portfolio, always try to have $30,000 in SGOV because that is liquid money that we can get out. And we know that no matter what happens, we can go and live in Vietnam for a year. Something bad happens, we can use that money to go regroup, get our feet under us, and make sure things are okay. So that's the core holdings. You've got your VOO, which is S&P 500. You've got gold, which is a currency hedge, and you have your emergency fund, which is SGOV. Now, those are going to make up 60% of your overall portfolio. So your first 10,000, even your first 20,000, should be going into some combination of these. It doesn't really matter which order you build this in. You can put it all in one and then just keep building it up, or you can put a third of it in each one at a time. But that is where you should be putting your money in. Now as a new investor, now we do get asked all the time, should I put all my money in? Like, say you want to put your first 10,000 into VOO, should you just dump it in there, like all 10,000 today? Generally, people don't like to do that because there's a lot of fear that the market could go down, and recently the market has been pretty high. Statistics do say that you have a 70% chance of doing better if you put your money in all at once, and a 30% chance of doing better if you put it in over time. But most people still do like to put it in over time because of that mental fear of the market dropping right after they do put it in. So that is a choice that's up to you. There really isn't a right or wrong answer. Statistically speaking, you're more likely to do better if you put it all in. And the reason for that is that markets do go up over time. So the odds of it going up over the next 3 months are higher than the odds of it going down. So this has been just a little look at how you should start investing. And we are going to get to those high-flying growth, high upside investments, but that is not where you want to start. If you start there and they go bad and they go wrong, you're going to be knocked out and you're going to want to quit investing altogether. So your first 10,000, your first 20,000, your first 30,000 even should be in these safer core holdings, which is going to give you confidence. They're going to actually grow for you. They won't grow as much as higher upside investments, but they will grow, and that's the key. They're unlikely to be bad investments when looked at from a 5 or 10 year time horizon. So guys, I hope this has been helpful for you. If you're new to investing, if you have questions, comments, you can put them in the comments below. But this is where you should start. This is where we started. This is what we make sure that we have as the core of our portfolio. Whenever we're talking on this channel about other things that we're investing in, that are the new hot thing that you should be investing in, always know that this is the core. This is always there. This is always behind it. This is always propping that up as a safe haven for the portfolio so that you don't end up in a bad situation. Guys, hopefully this was helpful to you. If it was, please give me a like, subscribe to the channel if you haven't already, and I will see you on the next video.